we go. All right, so I want to talk about Bitcoin and blockchain. So first I'm going to talk about Bitcoin. So Bitcoin is the very popular type of cryptocurrency right now. So first I want to explain kind of what a cryptocurrency is. Cryptocurrency. So basically how Bitcoin works is there's a certain number of Bitcoins released every day. And so what computers do is they pick a random number, and then you have to have a computer that can do what is called a hash, or basically do a bunch of math to check the number they have against the number that is the number related to a Bitcoin. And so how the Bitcoin thing works is that big computer banks are then work to do these hashes, and if they do the hash and you guess the number right, then you get the Bitcoin. And so that is what drives the value of the Bitcoin is that there is a low number in circulation. So because there's a low supply and a high demand, then we have a high price. Um, and so kind of Bitcoin right now has been a really high price, and people have been getting pretty rich off of it because it's becoming accepted in more places. And then also people think it has more value, and so when people think that something has more value, then they're willing to buy it because they think they can sell it at a higher value later. And so this is what I've heard called as a bigger fool's thing. A bigger fool's purchase. So you're waiting for some bigger fool to come by and buy something as value because inherently Bitcoin has no value to it. There's no currency, there's no gold that backs it up. It's just faith in that people will accept it as a currency that keeps Bitcoin as Bitcoin. So next I want to talk about blockchain. And this is the idea that runs behind Bitcoin. That is why the idea of a cryptocurrency is so new. And basically, it's this idea of I'm going to call it an open ledger. And so, kind of how this ledger works is that the ledger is nowhere but everywhere. And so, how it works is that computers run this ledger. And so, anytime a transaction takes place, then it will be put onto the ledger. Nothing can be taken, however, nothing can be taken off the ledger, and for a transaction to be put on the ledger, three computers must agree that that is what the ledger says. So they will constantly be checking against the ledger to see if the value they have for everything is true. And so it creates this kind of open source who has the right number as long as everyone agrees what the right number is, that is the right number type thing. And so what this does is it removes middlemen. The goal is to remove middlemen, and that's going to drive the price of banking down in general because you don't have to pay bankers, allowing people to trade at better rates, kind of thing. There's less interest rates going on because it's just computers running things. So it's the power to run those computers that do that thing. So if you're getting it from the sun by solar panels that have paid for themselves, there's really no cost to it. And so that's kind of the thought behind blockchain. How do you make it more secure? And it's secure in that if people don't agree, how do you do it? So yeah, that's kind of some things to know about Bitcoin and blockchain. Thanks for watching.